Okay, Ali Bhai, we're gonna be doing 1 day to 1 hour.
Okay.
Trigger time frame 1 hour.
Let's suppose this is our base time frame.
This is our base time frame. Yes. Okay.
We do it again and again for all the audience and all the students.
Oh, great, great, great.
Yes.
I like that. Okay, Ali Bhai, this market, if you look at this, yeah, this market is sitting on the monthly time. Sorry, let's just go daily time frame. I'm just gonna
Yes.
mark some high and lows.
Yes.
High, higher high, higher high, higher low, higher low. Agreed?
Okay.
Right. Long wicks in the market is very dangerous. They always come back to it. So let's look at long wicks. We have long wicks. Yeah,
Yes.
long wicks there.
Yes.
Let's look at the trend now. Where else we have long wicks? See this long wick here? Fold. Right. So let's just zoom out a bit. Let's see. Long wicks. This long wick here is still open. Can you see this? This is imbalance on this wick.
Okay. Yes.
So this imbalance here, full by this imbalance, Ali Bhai.
Yes.
All these wicks has been filled. Where else we have long wicks?
Yes.
We have, let's come down here. Let's say we have a long wick. That area there. Okay. Can you see? Long wick. Goof. Long wick. Yeah, we have a lot of long wicks here. This long wick
Yes.
here. You can see it spaces to the right. If I pull it to the right, that's your spaces. Those become your targets. In other
Okay.
words.
Okay.
Long wicks. So just to recap, the market must be making 2 higher highs so we understand what the trend is doing. 1, 2, 3, 4.
Okay.
So now, because the gold had a bearish engulfing pattern, so we have to look at the pattern at which it created the last high. Let's look at this high.
Okay.
This is a bearish engulfing pattern.
Yes.
This is a pin bar. Right. What tells it from this high, this imbalances hasn't been full. So what happens is the market will always come fill it up. Right. We don't know exactly when, but the market will come fill it up. So if it leaves imbalances like this, it's our target areas. These are target areas, target area, target area, target area.
Okay.
Because some institution, they got money trapped in one of these areas, which is either there, they probably got money trapped here, money trapped here. But we don't know where when they're gonna bring it down, because this they can take up, then bring it down, then bring it down. These are potential target areas, the red target areas, right?
Okay.
Okay. Now, so once we look at that, we identify that's all we need to do on a monthly time frame. That's all we need to do. Sorry, on a daily time frame. That's all we need to do. Then when we go, let's go down to a 4-hour time frame, and let's just mark some highs and lows. Okay. So this market, you see, Alibaba, once your high is broken here, can you see this here?
Yes.
I mean, this is very, very important because see this market here, this area here was holding the market in an uptrend. So if I draw a line here, see from where I mark that last high from the monthly.
Okay.
This is the daily. This is a weekly time frame now. It's a 4-hour time frame.
4-hour time frame.
Yeah. Can you see this low was broken, Alibaba?
Yes. Exactly.
That low was broken. Okay.
Okay.
That low was broken. So it's telling you that the market is no more in an uptrend. It's no more going up. It's stopped now. That market stopped.
Okay.
So it's confirmed now that this market is changing the way it's behaving. Because ever since from the low to the high, the low, this impulse leg, these lows hasn't been taken out. Can you see all these lows? So This is the last leg. So it's your last leg that we know. This leg, the last high. This was broken out now. And whenever it breaks out, the first thing you must do, it confirmed that it's now a downtrend. We're changing the behavior of how we're looking at this.
Okay.
So what I do is I pull out a Fibonacci level, right? Now I'll pull out a Fibonacci tool. I draw from the high. The low must be in. So that low, see from that green to green, right?
Okay.
Now note these Fibonacci areas are support and resistance areas.
Okay.
On your chart. They're Fibonacci numbers, but I don't be too concerned about Fibonacci numbers.
Okay. You don't respect golden ratio 60 or 30, 80 or 23. You don't respect. You just respect all these numbers according to support and resistance.
100%. So I'm only respecting the line. That's all I'm respecting. I'm not worried about the 61.8 and stuff like that. I'm not worried about that. Okay. Once I take out the line, I look left.
But so if somebody want to respect 38 to 61.8 to 38.2 or 50, this is up to him.
Correct. But you see, the market doesn't work like that. The market doesn't respect any level. Okay. The market respect price level, not Fibonacci numbers level. Yeah. Any Fibonacci number, you know what I'm saying, Alibhai?
Okay.
So let me just show you how I get this area again.
Yes.
So this is my high. Please. This is my low, right? That's my high. That is my low, right?
Right.
Now, can you see this area where it broke? That area. Yes. Let me take out this. Can you see this line here? Is it clear for you?
Yes.
Let's make it bigger. Right, clear. Let me make it. How's that? Red, can you see? Okay. You see the market now is telling you now it's changing from an uptrend to maybe a downtrend. Okay?
Yes.
Right. So what we need to be very, very careful on is when the market changes from an uptrend, it's telling you now, hey, it's going down and then it's going up and it's coming down again. So it's telling you that now I'm no more in an uptrend, I'm in a downtrend. But what happens is this area here is consolidation.
Yes.
This is where the orders are being accumulated or redistributed by the banks, which is like Wyckoff technically, right?
Yes.
Technically. And they exchange orders here. But you see from this area where they broke, Alibhai?
Yes.
Can you see that? If you want to respect Fibonacci numbers, this year you can respect. When it breaks the low, the first high that broke the low, if you want to, and I don't use this, but you can also take it an example. The market always come back to this 88 level. See the 0.786? I'm going to pull this left.
Yes.
I'm going to pull this left. See, you see where I drew my high to my low is? See, 886, 786. See, 886, 786. This is the market, but I drew from the Fibonacci from here. So that becomes my area of entry. Either this whole area here, this entire area is my area of entry.
Okay.
Right?
Okay.
So that's my entire area. Now I want to show you something. I don't draw from there. I draw from here, Alibhai. I don't worry about the 88. I draw here. I'm more happy in these areas. I'm more happy looking at things like that, zones. Because I know I'm coming back here. Because this is like an area where they got orders stuck. Okay. So I'm not interested in 80. I'm not interested in the FIB number. I'm more interested in the area it's coming back to, which that's my chart now.
Okay.
So I don't enter now. I can't enter long and say I'm going to go back into that. It can work. I can enter long here. Impulse, correction, impulse, and then correction, impulse, correction, impulse. I can enter here. But what it's telling me, the market formed, it came back to its level. It's happy now. It's done its move, right? It's done its job. And now it'll create an alternative move to the downside. Now, when I'm saying that the market came up, I'm not entered. What I normally do is sometimes I put a pending order here right?
Okay.
I put a pending order into this area here. Like I'll put a pending order right there, and I'll put my stop just above the high there, okay? And you can target imbalances. So if my first imbalance is here, can you see that? First inefficiency on the daily chart that we marked is here. Imbalance, imbalance. And we also have an imbalance here. Sorry. We also have an imbalance here. So the market can come here first, tap off, and then break all these areas and come to the lower or even lower here. That's an option there, or even all the way down to here, 1760, because it got some orders stuck there. Or it can do same, but we're not telling exactly where it's going. If you need to enter on a daily time frame, you
Okay.
just enter for the first target. Enter from the 1 hour, and your daily is your first imbalance week.
Okay.
So enter 1 hour. 1 hour entry is there, and your first target will be here, 1903.
That's great.
Right. I tell you why it's important to maybe come down and get this target here, because the gold is making higher highs on a monthly time frame and on a yearly time frame or on a monthly time frame. I would put my Fibonacci from here to the top, and this becomes my area where it can potential reverse. So TPs, short-term TPs are at the first, see this area here, this entire area here. Market can reverse there.
Okay.
It can reverse all the way to the upside. We don't really know. So,
Okay.
but what we know is that this imbalance is coming to fill, the gold is coming to fill this imbalance here, which is still if you put a trade in here, it's still 1 in 5, which is not a bad trade.
Yes, that's great. That's great.
You know, Ali, this is like I won't say it's like institutional trading, but with support and resistance, and it got market structure,
No,
because you can start.
this is more than sport and resistance and more than institutionals. And to be honest, this is one of the best session ever I did.
Yeah. And then you know what? I just want to tell you, once you understand where the trend is going, if you're a trend line trader, any counter trend line to the downside will.
I am not a trend line trader. I am basically sport and resistance trader. I am not a trend line trader.
No, Alibai, no, I'm just saying for your students. I'm saying if they are supporting trend line